What's up, guys? It's Ronnie G from the Bro Street Trades. As promised, here's the day trading sheet. I said I would go over it, and I am. What data I collect, um, how to enter the trades. We'll talk about in a second. But let's just jump right into the sheet. So first off, shout out to Mash for providing the sheet. He's a genius with these sheets. Don't hit him up because he's probably not going to share it to everybody. But shout out to Mash for setting this up. But as you can see here, all the data we collect if it's before 11 a.m. I think that's very, very important to know when your trade would be available. As for me, I like to be away from the desk by 11 a.m. So if I need to get in the trade before that, so I can just go along my day. I don't want to sit at the desk all day. I actually don't think it's profitable to sit at the desk all day waiting trades. Do trades come after 11 a.m.? Of course, as you can see here, a few yeses here, and that happened. But as far as the trades themselves, you should know that most of my trades happen before 11 a.m. So if you want to fix your schedule to that, or however you want to do it, we collect the position, the entry date, the prices, as you can see, the exit date, their day trades. So most of them exit the same thing. I think we had one that was a swing, which was a snap trade, because it never stopped out. So I just held it. Anyways, so the high of the contracts are the high after you got in the trade. So after the trade was triggered, and I'll show you what that'll mean in a second. That's the high of the contract, not the high from the low of the bottom of the day to the high of the day. No, it's the high of the contract after you would have gotten in. So even though this trade you got 88% here, the high of the contract still was 280. But the reason why you only got 88%, as you can see, is because it hit a TP. Who's going to be angry with 88%? I have no idea. But that's how is this designed to track. The low of the contract, same situation. It's designed to track the low of the contract after you got in. After you got in and after you were stopped out. So for instance, this NVIDIA trade, the low of the contract was 35%, but your stop out was you only stopped out for 26%. I like to wait for 5-minute closes, or sometimes even 15-minute candle closes, but that's besides the point. I don't just get out when it breaks a key level, and I don't get in just when it just breaks a key level either. You want to let it sit first. So it did hit a low of 35%, but you stopped out 26%. That little bit of patience saved you, 80, 90, $100, something like that. So that's how this works. The higher the contract after you got in, the lower the contract after you got in. The position sizing. I did $500 position sizing. That's not my sizing, but this is a small enough sizing for everybody. They should be able to trade. So if you had a $10,000 account, 10K account, $500 is like what 2% of your account. You can manage that easily. You can lose $500 in a day and it won't hurt you. Right? The day of the week, we collect the day of the week. As you can see, the profits and loss here. Was it a 0 day or not? I keep track of this because I like trade the indexes, and even on Fridays. So this also will give you a good idea as percentage gains. So for instance, a lot of these are yeses right down here, not even the biggest winners. But that like this one right here, 224%, but it was a 0 day. So that makes sense why it was 224%. To me, that data is very important because if you get 224% on a Monday on Apple had to make a crazy ass move. But it's almost impossible for you to do that. So it's nice to know if it's 0 day or not. As you can see, the contracts. I even keep track of the equity move for equity traders. So if somebody trade equity instead off margin, 3%, 4%, you won't make that much on the equity trades. But your risk is super tight as it's not an option. It won't decay or anything like that. But you can still, as you can see, make decent money off that. Total net profit 42%, 42.5% in about 3 weeks. But just to go back here, so as you can see, some of these are multiple entries on days, like DraftKings. So if I recall correctly, DraftKings trade was buy if it hit this demand and sell it supply. If I remember correctly, it was a couple weeks ago, so I don't have the chart up available. Then it was if it hit supply, sell it. Like I wanted to be a seller of supply and I wanted to be a buyer of demand. That's why I have two trades. I personally took the call side of it. I did not take the put side of it. Once I took the call side, I was done for the day. But I still track it as a trade because it still was in the trading plan, if that makes sense. I track it as a trade, even though it was still in the trading plan. So I did not catch this 280% on DraftKings personally, but someone could have. So I am tracking it as a win because it did exactly what I thought it would do. I want that to be very clear. NVIDIA, same situation. I personally took every last one of these trades actually because it kept faking out, but it kept breaking a level and then going back out, stopping out, breaking a level, now stopped out, and then boom, finally it broke off. If I'm not mistaken, that was also a trade from Moose from the Discord. It was a suggestion by him. I actually I agree with him, like the trade, and I took the trade. How I do it, how I do my sizing is I do something called a martingale, which is you basically double up. So I think I took something like 10 contracts the first time. Then I think I took like 15, and then I think my final position was 30 contracts. I don't recommend doing that, but that's how I personally do it. SPY, if I recall correctly, I got both these, but that's the idea behind it. If I gave the setup, and it does that setup, because I think it was this Monday, Valentine's Day Monday, I think I only caught the first move on SPY puts as it was coming in supply, and then it came into the demand zone. That I said if it hit this demand zone, I want to get long. Hit the demand zone, we're back in the supply, and then when it hit the supply, it sold back off, and then so you would have caught this monster move here, 224%, if you would have got it at supply. It happened after 11 a.m. If I'm not mistaken, it was like 1 o'clock. So trades available all day. If the setup don't appear to me by 11 o'clock, I leave. But if the setup don't happen and it won't appear till 1 o'clock, 2 o'clock, and you want to take it, go for it. The setup is still there. It's just not. I don't want it. I'll continue over. We keep track of the weeks. What weeks were good? As you can see, last week was pretty good. You would have made $1,800. We keep track of the months, green months, and we even keep track of the days of the week, percentages individual. So Thursday seems like the best days. Monday seems like the best days. I would almost guarantee Mondays because of SPY 0 days. So far, 88% win rate, 15 wins, 2 losers. That's actually phenomenal. And like I said, I didn't take every last one of the trades. I took them all, but I didn't take them all multiple times. As like I said Monday, I did not take them 3 times on Monday. Once I made my profits, I'm going for the day. Make that very clear. All right, now let's get into how I take the trades. Switch it up. All right, so the trade, the plan was on Monday. On Friday, was I'm going to the sheet, going to the Discord right now. I said I'm not seeing much, to be honest, but I'll give an update midday. If mid market, if I like, but I like taking it short below 43.60, targeting demand at 43.46 for a nice scalp. I will hold on the runners as it could break down further with major support on the daily being pretty far away. Major support was pretty far away on the daily. But so that was the game plan. To short below if it got below this area. That was the game plan. So, but I got in here, to be honest with you. I front ran this hard. So what I'm looking for in this situation is I want a key level to break, but I'm also looking for a confirmation. Would be that a candlestick pattern, be that an increase in volume, anything of that nature where I can see seller stepping in, where I can see buyer stepping in. I'm looking for those situations. So here's exactly what I was looking for in this trade. First and foremost, we're below supply. They'd already created new supply. I either wanted to run up in the supply and start selling off, and then sellers get aggressive towards the end. I want to see a trend line rejection. This is the daily trend line. It rejected that perfectly. And I also want to see us below VWAP. If you don't know what VWAP is, I can make a video on that as well, but it stands for volume weighted average price. Basically what that means is that when prices below this, people are looking to sell. Prices above this, people are looking to buy. That's the simplest way to explain it. So prices below my VWAP, it's rejecting the trend line. It's below supply. It already looks bearish to me to begin with. So I come up with this game plan in the morning that if it breaks this level that buyers seem to be defending, as you can see here with this hammer candle, and then as it came back down, they tried to defend it again. So when I got in off this candle right here. This candle, as soon as it got above, those sellers stepped in and it closed below. I got it right here and front ran firmer and a straight down. So I have these two highlighted right here, right? As you can see these ovals. These are the kind of structures I look for. So it's like a drop, base, drop. I'm looking for this setup right here at a major spot. I'm looking for it at a major resistance, a major support. I'm looking for it in that capacity to take it the other way or to take it down. So for instance, so the second that this came down this level, see what somebody would have did was is they would have went short. As soon as it got below, they'd have went short. And there's not too much wrong with that if you put your stop loss in a decent spot. Let's say you was like, all right, I'm gonna put my stop loss here, and you got in here and you got it when it broke below, and you said I'm gonna put my stop loss up here. And what you want to do is you want to honor the close of the candle. Whatever candle time frame you trade on, you want to honor the close of that. You want it to close above your stop loss. Even if that means it fucking yeets and it don't close until it get up here, you have to eat that. If you don't, what can happen is just like this. It can get above this level, and then everybody gonna say bye, 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 and then look what happens. It rejects and closes below. That's why you want to wait for a close. So you could have got in here. I wouldn't, but this would have been a great spot to get in when it closed below. You could have got in here on this candle, but this is the structure I would look for right at a major spot. So as soon as it made this structure, I would have got in. As soon as it made this drop, base, and then I'm anticipating a drop. So I would get in here, my stop loss above here, and I'm targeting this demand. That's how you came up with those like 44% trade. I made way more obviously because I got in up here, but that's how you can get an easy analysis to take this short here. You don't have to be greedy. You don't have to, want a 150% trade, even though a lot of the trades go for that amount. You just want to get a nice scalp. 40% on $500 position sizing is not bad at all. I can't say that enough. Let's just go check it out one more time. You would have took the puts. You would have got in at the money. I'm sorry if I skipped over that. I like to get contracts at the money, or at least one out of the money. If it's not a 0 day, then I want to go one out of the money. But if it's a 0 day, I want at the money. That's what I want. So you'd have got in at 211. By the time it got down there, 318 for 50% gains. Now, how am I calculating these entries and exits? I'll show you. So let's just go to SPY. I believe that was like the 436 put. For the 18th, right? So this was your entry. You see my courses are linked up. I'll zoom in closer. So this was your entry. So let's say you got in. Let's see here. I'm being conservative and saying this candle right here on the sheet. But let's say you got in yet again on that structure that I told you. So from 206 will be an entry, right? And demand is your target. So 319 is where you got in. If I'm not mistaken, I got a 340. I don't know how I got that exit, but I think I got a 340 on the runners, on the remaining like 25% of my position. Once it made that big move down, I got out immediately, and I had a sell order for like 340 just in case, and I'm not mistaken, it hit. But that's besides the point. Let's say even if you got in as soon as it started pushing down, as soon as you was like, all right, I'm gonna wait, you still would have got 51%. High of the day, 113%. Like it's really not hard to trade. It's mostly a psychological thing. I could talk about this all day, but this is how I go about taking the trades. This is how I go about building the sheet. As you can see here, yet again, when it came down to this level, you could have got in when it closed below. I like to wait for some type of structure or some type of like rejection candle like this. Like I like to wait for something like that. before some indecision or something like that, and then I'll just put the risk on the table, take it short. Stop loss, you could have been up here, and take it down. You gotta know your risk to reward from the gate. So that's 0.17%, 7 points, to get 0.48%, 21 points. So 3-to-1 risk to reward. I'll take that all day. I really, really hope this helped. I'm definitely going to still be posting trades. Anybody any questions, hit me in the Discord, hit me in the comment section. I don't feel like I forgot anything. Till next time, guys. Take it easy.